Some of you are going to possibly think that I have completely lost my optimistic mind, but stick with me all the way to the end. I think you're going to see that there's plenty of room for optimism in this crazy world that we're living in right now, with so much going on in this tariff situation, as well as all the Elon Musk, antics as well. So here's my first bold prediction. Elon will leave his major role at DOGE on or before May 31st. This is not going to change, but he is going to leave by May 31st. Why? Because June is the biggest month ever for Tesla, the biggest month ever for maybe any company ever. Maybe the biggest month since the first major refresh of the Apple iPhone, with people around the block, waiting in line to get their new iPhone. The stakes are high, and the potential is nothing less than historic. I mean, historic. So he will be in town. He will be there. He will be all over it. And he will be large, as they say, and in charge. Now, with regard to this morning or yesterday and today, I'm going to go back to Brian's theory. He thinks we have reached peak bad news. Other people call it a clearing event. But last night, I suggested that we didn't get the clearing event, in that the chaos was going to continue. Well, I've thought about that overnight, and I think the chaos will continue, but it will be in the form of moving towards stability. And it is possible for as our current government, this government is large and solid leadership. I think they're going to be able to have plenty of negotiations with the top 50 trading partners, and in particular the top 15, as they call it, the dirty 15. They'll be able to negotiate with all those people simultaneously, and we will be moving very rapidly towards resolution with many of them. And these announcements will be coming every day. I believe that is Trump's plan, is he wants to be able to make an announcement per day about some country who has agreed to be to not capitulate, to make a sensible decision with regard to America's power and America's need to resolve this issue. Now, 100% worthy of note is that we have thus far, up until this morning, up until the very beginning of the session this morning, we had not pierced the 10% drop in the S&P, but now we have. This is the one little hole in my story. We're currently now down below that 10% level. Not a ton, not even to 11%, but we are below 10%. I don't think we'll finish the day below 10%. This is something to watch. I think it's going to be a useful exercise. I think we want the S&P to close today above 55.22, something like that. If at all possible, that would give us another signal that the market doesn't believe that we're going into an actual recession. Meanwhile, the very, very bad Independence Day tariff news has the 10-year almost to the 3 handle, and oil almost down almost 7%. Now, this is not bad news. Both of these are extremely good news. And some people are saying, well, this is exactly what Trump and Bessent wanted, is they wanted to cream the economy. But maybe what they're really trying to do is get the investors to recognize that this is for real, and that this will impact. There will be an impact. I'm not saying there won't be. I've said all along, we could be very close to a recession over the next 6 months. And the market is suggesting that. The market is suggesting in many different ways that we're going to have a very flat, very, very flat. In fact, I'm not sure that I wrote this down. So let me just say it right now, is that the mass, well, we will talk about it. Never mind. I'll get into it. Okay. So this is huge news. Now the VIX shot up to 27. It's down a little bit last time I checked, from the 27, maybe 26 and some change. That's high, but it's not that high historically for recessions or major crises, if you will. Commonly gets much higher than 27%. Tesla opening at 271 this morning is $23 higher than I thought it would be given yesterday's numbers and the macro. Now, the last time I checked, it was 268, but that's just amazing to me. So short of really bad news, I think the bottom is in. And I think this is at least partially due from new money from conservative investors. That could be completely wrong, but I think there's a lot of new retail investors in the project. And then I think the FOMO is also obviously we're just getting closer and closer to June, and also getting closer and closer to Optimus. These are huge, huge things, and so there's got to be some FOMO going in about that. There's also probably a little bit of folks that are jumping in because they understand that this tariff thing is going to end up being good for Tesla comparatively. Okay, other Ford, Stellantis, etc., all of the other car companies are getting hit worse than Tesla in this regard. So that'll help Tesla sell more vehicles theoretically. Piper Sanders says this: while Elon Musk politics were likely a non-zero contributor to the Q1 downside. I like that description. That's a really good description. We still think factory downtime was the biggest headwind due to retooling for the Model Y. Absolutely. While the crummy Q1 results were widely telegraphed, and while journalists are seizing on the opportunity to write about arson, we think the investing community risks losing sight of Tesla's upcoming product unveilings, as well as the impending robotaxi launch in Austin. We think Tesla sentiment can change rapidly once the catalysts emerge, and the next few months are catalyst rich. We will revisit our estimates in light of Q1 deliveries ahead of the earnings call, which is scheduled for April 22nd. That was a nice summary. That's a strong statement. It's Randy Kirk, by the way. Liking, subscribing, and notifying is all smart things to do. And then you could also become a member or join Patreon. Yes, that would be just wonderful thoughts. Okay, CNN. The interviewer of Scott Bessent says, Collins, I don't know the first name. She says, prices will go up for Americans in the short term, right? Bessent says, they could. They don't have to. Businesses don't have to pass them on, or the producers in other countries can eat the tariffs. It's a very complicated calculus. Oh, as I've been saying over and over and over for many months, Scott Bessent, maybe one of the most respected guys in the business, agreeing with me. What do you know? And it's way more complicated than they could get in that paragraph. For those of you who follow the channel, you know that Jeff Lutz and I have been talking about all the different ways that these prices can be impacted going forward. So the manufacturer in the foreign country can eat some of the margin, some margin. Everybody can look for ways to change the product. You can completely change the product and make it much less expensive. You can start buying it from a different country where the tariffs are not as high. You can make it in the United States. That's an obvious one. Consumers will make decisions not to buy the things that just don't make sense anymore. It goes on and on and on. And the country can change their policies with regard to their currency. The country could actually contribute with some kind of export benefit to the country, to the company, to help them keep their prices down. There's so many ways. Anyway, this is just prices will probably go up. I have been saying I think prices are going to go up about 0.8% more than they would have without the tariffs. But all of that money is the exciting part about all that money that we will be paying as a tax on the products that we buy that are from some foreign country, is that all of that goes into the tax pile and means that they can use that tax money to either reduce the deficit or eventually maybe to send some of it back to us based on the combination of the savings or the money that they get from these not the income tax, not the IRS, anyway, what are they calling it? I forget the name for it now. But anyway, getting money from the tariffs, one way or the other, helps us as Americans, okay? It just does. It may mean our income tax gets lower. It may means that inflation drops because we are reducing the deficit. It's all part of this whole schemo, and I think it's brilliant. Anyway, that's just me. Tom Lee says he sees signs of a Trump put emerging, referring to the theory that this White House would alter prices if stocks fall too much. Lee seems to be doubling down on that with his latest prediction. He said the strategist said that Trump likely wants to see a market rally because it would validate his inelegant negotiation of the tariff landscape. Lee noted that the White House appears anxious that its tariff plan could implode, citing a Politico report that lays out a potential blame game if things go awry. I think that Trump does want the markets to go up. I'm not sure he's terribly worried about what Politico says. Trump also wants an equity market rally because of signs of waning public support via some polls, as well as weak surveys on consumer sentiment and manufacturing that places the blame on tariff stress. I think that would be more important to him, but still not that important. I think he recognizes that you've made the incision, you've got to complete the operation so that the patient can move forward. Also, a stock market crash could lead to an expensive recession, which could require substantial fiscal stimulus in order for the economy to recover. Possibly. U.S. companies also would need friendly capital markets rather than a declining stock market to back any onshoring activity stemming from tariffs. The strategist adds, this is absolutely 100% true. Lee has earned some respect on Wall Street for nailing the S&P 500's 2023 finish and coming pretty close again in 2024. His call for 2025 is the S&P will close close to 6,600, which currently at 5,500. So that would be about a 22% increase from here, or about, I think it would end up being a little under 15% up for the year compared to where it started. Bill Ackman says this: the countries that make the first tariff deals with Donald Trump will make the better deals. The countries that wait or retaliate will regret that they were not part of the early deal group. Or worse. I don't know what would be worse than regretting. Anyway, Bill Ackman also says this morning, sometimes the best strategy in a negotiation is convincing the other side that you are crazy. Well, this will be a new one. I've quoted Bill Ackman many times before, but Palmer Luckey, I think this is the first time I've quoted him. I'm becoming a huge fan of Palmer Luckey. Highly recommend that you follow him on X, that you listen to him whenever he speaks. The guy is he's kind of like a slightly less, he's kind of like Elon. Not quite an Elon, but he's not that far behind Elon. Replying to Sociotech Global, he says, no, protectionism is definitionally the opposite of free trade. The whole point of reciprocal tariff policy is encouraging the elimination of tariffs, as several countries have already done in response. There you go. Listen to that. Yes. Okay. Everything is in this deal. There's some protectionism or even re-onshoring. It's not even protectionism. It's really bringing manufacturing back, which is not quite the same as protectionism. But there's also the idea of bringing down all tariffs. Okay. And then there's also the idea of raising money through tariffs. Trying to do all three of those at once is hard, but maybe get a little bit of this and a little bit of that. In the week ending March 29th, the advance figure for seasonally adjusted initial claims was 219,000. It was low, a decrease of 6,000. You would have thought the market would love it. The previous week's level was revised up by 1,000, but the 4-week moving average was 223, a decrease of 1,250 from the previous week's revised average. The previous week's average was revised up by 250. Anyway, the total number of continued weeks claimed for benefits in all programs for the week ending March 15th was 2,100,000. That was a decrease of 46,000 from the previous week. So in other words, the jobs numbers tomorrow probably going to come in good. ADP was good. The JOLT was good. This is good. I think the jobs numbers are going to come in good tomorrow. The market's a little down. They're down because of the tariffs, but this good information is not bringing them back up, at least yet. We'll see in a minute. MarketWatch has this. The U.S. international trade deficit narrowed 6.1% in February to 122.7 billion. That's still really, really, really high. Imports of goods and services were about unchanged. After surging since November, the economists attribute the jump to businesses seeking to get ahead of higher tariffs. We know this. The wider trade gap in the last 2 months is going to take a bite out of the first quarter GDP. Some economists are now forecasting a decline in GDP in the January-March quarter. It could happen, but this would be a very, very, very technical decline based on this import-export problem. And I think it would be considered to be not a recessionary note. This is a pull forward. You would have to put an asterisk on it, I think. We'll see what happens. The S&P Global US, this is from the PMI, the U.S. Global Services PMI was revised higher to 54.4 in March from a preliminary 54.3, marking the highest reading of the year so far. Business activity grew as customer demand strengthened, aided by unseasonably warm weather. New business rode solidly, though mainly from domestic sources. Despite this, confidence slipped to its second lowest level since 2022 because of concern about tariffs and federal cost-cutting policies. Both of those are important. Employment increased modestly, while operating costs surged at the fastest pace in 18 months. That's interesting. Driven by labor expenses and vendor prices. Labor expenses are the one concern I have on the inflation front. They continue to be, well, look, we want labor to go up compared to inflation, but it can't go up so much that it causes inflation. That's real inflation. Competitive pressures limited firms' ability to pass on rise. Why is it real inflation, you ask? I know. I just heard many of you going, what do you mean, Randy? Why is that real inflation? Well, because if your wages go up faster than you make more widgets, then that is a productivity decline. And there's only two elements in inflation: productivity, however, goes up or down, and then government spending compared to government income. If you have to print money, that's inflationary. If you get productivity decreases, that's inflationary. Got it? I hope that's a short answer, but I think it's a precise one. Okay, economic activity. Here's the other the services sector ISM this morning, which is also, these are surveys. Economic activity in the service sector expanded, so they're agreeing in the 9th consecutive month in March, saying the nation's purchasing and supply executives in the latest ISM report. The services PMI registered a 50.8%. It's an expansion for the 55th time in 58 months. So the services and part of the business continues to do really well. Their representative, I don't know his first name, Miller, continues. March saw drops in the readings of 3. The new orders, the employment, and the supplier deliveries of the 4 sub-indexes that directly factor into the services PMI. Only business activity saw an increase over February's reading. So February was strong, so a little bit weaker in March. Employment was the only one of these sub-indexes to drop into contraction territory, although the other survey didn't get that. There has been a significant increase this month in the number of respondents reporting cost increases due to increases in comments on tariffs and concerns about potential tariffs and declining government spending, as we said a couple of times already this morning. These are the two issues. All right, now before we go into the numbers, I thought I would close with this one from J.P. Morgan. I think it gets things just about right, except for their concluding analysis. On a static basis, today's announcement, that means yesterday's announcement, the tariff announcement, would raise just under $400 billion in revenue, or about 1.3% of GDP. This would be the largest tax increase since the Revenue Act of 1968. We estimate that, and it's not going to end up being there. He's saying in a static environment, it won't be this high. It might be 0.8 or something like that, is in my estimation. We estimate that today's announcement measures could boost PCE prices by 1 to 1.5% this year. That's very close to my estimate, but I'm thinking it'll be under 1%. And we believe the inflationary effects would mostly be realized in the middle quarters of the year, which I've said over and over again. The resulting hit to purchasing power could take real disposable personal income growth in second and third quarter into negative territory. I don't think so. I think that's where we're going to get the turnaround. And we'll see actual real disposable personal income growing as opposed to retracting. And with it, the risk of real consumer spending could also contract. That's possible, but they'll be putting it in savings, okay? Because they'll be nervous. But I don't know. I think it's only going to be for one quarter. This impact alone could take the economy perilously close to slipping into recession. Exactly, I believe it. And this is before accounting for additional hits to gross exports and to investment spending. Headlines about retaliatory measures by U.S. trading partners are already coming out, and we expect to learn more in the coming days. As noted above, retaliatory approaches by these foreign governments would be muy estúpido. I think that's right. It's been a long time. The somewhat confusing nature of today's news, coupled with uncertainty of how long these tariffs will remain in place, should make for an even less friendly environment for investment spending, though that is one way to narrow the saving/investment imbalance and hence narrow the current account deficit. And they'll revisit that forecast later this week. Look, this is heart surgery. After a period of recovery, the patient will be better than ever. That's me, not them. All right, so let's take a look at the numbers. Let's see what's happened since I last looked, and we've got the beginning of the bottom here. All right. So Tesla is down 5.16%, holding at 268. It opened at 271. We're now at 268. I'm happy with this, down 5.24. Now remember, it went up dramatically yesterday. So this is basically taking us back to where we were. The Dow is down 3.47, NASDAQ is down 4.77, and the S&P is down 3.84 to 5,453. Now remember, 5,522 is roughly 10%. So we're now down well below that 10%. But it's the curve is now up. You're not going to hear that it got back to 55.22 on this show, but maybe you'll hear it when I'm talking to Bradford Ferguson later tonight. Okay, let's go ahead. We've got Magnificent Seven all down. Big time, Apple down 8. Amazon down 8. These are percentages, 8%. Meta down 7%. Microsoft down 2. NVIDIA only down 5. That's interesting. Thought NVIDIA was down worse later. It is picking up faster than the others, and some of these other ones are already picking up as well. We've got the Cathie Woods all down, also big time. Nike is down the worst. That's not a Cathie Wood stock, but Nike's on my list, down 13% because of their massive Vietnam operation. But Vietnam has already said that they'll zero out. So I'm not sure why that's not being taken into consideration. In other words, Vietnam has said they will go to zero tariffs as their opening gambit. All right. So, and I don't know that we're all that concerned about how much we export to Vietnam. We'll see. Anyway, that's all super interesting. Let's go on to the bonds. Have we gotten into a 3 handle yet? That would make me so happy. Let's see where we are. Okay, where we are is so close. 4 away. 4 basis points away. We have got the 10-year is at 4.038, down 15 basis points this morning. Just all we need is 4 more basis points to get down to 3.98. That would be great. And then we can continue to 3.75 and to 3.5, et cetera, et cetera. Okay, the 2-month is down 0.6 of a point, and the 2-year is down 17.5. That's interesting, down to 3.729. Okay, let's go on to oil. Oil was down very strong. Let's see where we are now. Oil is down 7%, down to 66.72. Extremely good news. Brent is staying at only $3.40 now, higher than Texas Intermediate. So it's down also 6.5% this morning at $70.14. Natural gas up $2.49%, back above $4 at $4.15. Gold was down much more earlier, so it is recovering from how much it fell. It apparently wants to stay up here in this territory. It's sitting at 30,139 right now, down 0.84%. Silver down big time, down 7%, sitting at 32.27. That is a big drop. Copper also down 3.79, under $5 again at $4.85. That surprises me. The copper one is a little surprising. I'm sorry, the dollar is tumbling, but it looks a little mixed to me. The headline is it's tumbling, but I'm seeing mixed. Bitcoin down 4,421. 82,000 though, that's not bad. That's not bad. It's kind of like Tesla again. It's down big, 5%, but it's sitting at 82. You know, if it'd be more worrisome if it was sitting at 79 or 78. So it kind of, again, following the Tesla lead, it's so weird that that's happening. Okay, that's all we have, except to let you know it'll be CERN Basher as always tonight at 7:45. It will, well, always except for last week when he was out with his family vacationing, and then Bradford Ferguson at around 5:15, all things being equal and the creek don't rise. We'll see Bradford about that time, and I am exceedingly excited to talk to Bradford about all this that's going on. He has been heavily investing his time and energy into X with lots and lots of posts, so I know kind of where he's feeling right now, and I want to talk to him about it. Last night, Brian White, excellent. I'll put that card up. Do not miss the Jeff Lutz. If you didn't already see me and Jeff last night, a lot of people did. It was one of the best shows ever, Jeff Lutz. So I'll put both of those cards up for you to go check those out. Yeah, that's it. I think that's all I've got for you right now. It has been great, as always, talking to you.